This conference will now be recorded.
Hi, what's up, everyone? This is me, Ali, and I'm representing ABFX. Guys, first of all, a very warm welcome to all of you in this particular webinar, and I really hope that you are having a good time. Guys, before I proceed towards the webinar, let me tell you that we are glad to announce that we are having 4 webinars a week now, and these webinars are particularly designed for beginners and for professional traders. For instance, if you fall in the category of the newbie, or maybe if you have 1 year of experience or maybe 2 years of experience and you are feeling less confident about the market, and you feel that there is still room for learning, you simply can join our webinars which are designed for beginners, and you can visit our website, by the way. And then we have also designed the webinars for professional traders. For instance, if you are having an experience of like 3 years, 4 years, 5 years, or maybe more than that, and you feel you need any help with your trading, or maybe you want to stay updated with whatever is going on in the market, so maybe in the form of live commentary, or maybe you want someone professional to help you, maybe you want answers to some specific questions, then you guys are more than welcome to join our professional webinars. And now we are going to meet 4 times in a week. Isn't it exciting? Yep, I think so. All right, so moving on towards the webinar highlights, guys. Today, I have decided to conduct a webinar on FOMC meeting and the Fed rate decision meeting. And the reason behind this is, uh, after a long time, like this week so far has not been volatile because investors were saving their bets to trade the FOMC meeting and the Federal Reserve interest rate decision. But there is a day we do have a FOMC meeting and Fed rate decision due for today. So, and also this is also one of the most important day of the week, because from next week we have Christmas holidays and there is not going to be any major fundamental releasing until the first week of January 2019. So until then, the volatility is going to be very low. The brokers will be online, and like you will be able to trade with ABFX. But the thing is, volatility is likely to be very thin. So today is the day. Today, tomorrow, and day after tomorrow, like until Friday, market is likely to stay volatile. But today is something which is very important from trading point of view. So let's proceed and take a look at the webinar highlights. The very first thing that we are going to talk about is, now I will let you know what is monetary policy and why it is important. Second thing, who is like what is Federal Reserve, or who is Federal Reserve, and what is FOMC. In case you know about it, that's great. But in case you are hearing it for the very first time, it is going to be a very good addition in your knowledge. And then we are going to take a quick look on the history of interest rates. Definitely, we are speaking about the US economy. So we are going to take a look at the US interest rate. And then we are going to look at what to expect from the FOMC, like that is a Federal Open Market Committee. Then we are going to see what to expect from them and how market is likely to react based upon this release. And lastly, we will be having a discussion on the technical side of the market. Guys, when I say technical side of the market, it means that we are going to see like what are the technical levels that we need to follow based upon the decision. So this is going to be the forecast for the US dollar. And by the end of the session, guys, you guys have two options. I always appreciate my attendees, and I do expect them to ask me as much questions as you want, because if you're not asking questions, you are not understanding much. So just feel free to share your questions with me in the chat. You can find it on the right hand corner of your screen. So what we can do is you can ask me question during the webinar as well. However, there will be a time, like I will give you 10 minutes or 15 minutes depending upon the number of questions at the end of the webinar. So we will spare some time to answer the question one by one. However, if you feel that this question is very, very important and you can't understand things further until and unless you get your concept clear on a particular thing, then you are welcome to ask your question in the chat box. All right, guys. So let's move on and let's take a look at what's going on in the market. So first of all, guys, it's a fundamental thing. Like as you know, the forex market is all about like the analysis is all about two things. Like there are like technical analysis, there are fundamental analysis, then there are sentiment analysis. If I speak about like in the past, the sentiment analysis was not given so much importance because the information was not widely available. But right now, information is widely available. You have abundant information on your mobile phone. You can visit our website, and we are posting analysis. We are getting you informed beforehand, and you know that there is going to be FOMC, and then there is going to be a rate hike, or maybe there is going to be a press conference, and what is likely to be the outcome from the FOMC, and what you need to do with the US dollar. If you know this is like there is 75% chance that this is going to happen on Friday, so definitely you will position yourself beforehand, even before the release of news. So which means that nowadays fundamental analysis is very, very important, and along with like in order to drive the sentiment analysis, right? So in case you are wondering what is fundamental analysis, guys, it's like a technique where you try to predict the future prices based upon the economic events, based upon the news, or based upon any activity which is happening in your economy. So yeah, when we try to forecast the future prices based upon the market like economic reports or political events, that is fundamental analysis. And yeah, here in the red you can see that the most important fundamental information comes from the central bank, and today we are going to talk about central banks, right? So let's move on and see what we got next. Let me help you with understanding of the monetary policy, and let me tell you why this is important, like why it is important to know what is monetary policy. Guys, monetary policy in simple words, like the theoretical definition is what I'm going to do is I'm going to give you both aspects. Like I'm going to give you a theoretical definition, and then I'm going to give you a very simple concept of what is monetary policy. First of all, the theoretical definition here is uh, which you can find on internet, right? You can Google it. You will be finding it maybe on Wikipedia or maybe on any other website. So the monetary policy is a process by which monetary authority of a country controls the supply of money, and often targeting an inflation rate, interest rate, to ensure the price stability and the general trust of the currency. All right. I believe that this is maybe this is sort of difficult. So what I have done is let me break it down into different points. All right, guys. So monetary policy is all about monetary policy is issued by a monetary authority of a country, right? And why this is issued? In order to control the supply of money, right? Why do we control the supply of money? Because we need to maintain our inflation rate, and we also need to maintain with the help of interest rate. In case, let me repeat myself first of all. I guess monetary policy is issued by monetary authority of a country. Why this is issued? Because we want to control the supply of money. And why we want to control the supply of money? We want to maybe control the inflation rate, we want to control the unemployment rate, we want to improve production, we want to improve GDP, manufacturing things, we want to improve our economy, like we need to improve the labor market. So everything which is in our economy, we try to stabilize our economy with the help of monetary policy. And what are the tools that we use to stabilize our economy? That is interest rate. There are basically different tools available for monetary policy, like you can use the reserve rate, interest rate, or maybe open market operations. But the thing is, today we are going to talk about interest rate because the focus of the market is on the Federal Reserve interest rate. Like there are chances that there is going to be a hike in interest rate, but I will go into detail in our upcoming slides. So let's move on and let's see why it is important and what is the monetary authority of a country.
This conference will now be recorded.
All right, so we were speaking about the financial authorities, guys. The financial authority, when we say who issues the monetary policy, and I said that there is some financial authority, and this financial authority is called central bank. Now, what is central bank, or who is central bank? Central bank is called it's called a father of all banks. And why it is called father of all banks? Because it monitors the banking services and operations of the commercial banks. And this particular bank is also responsible for issuing or maybe printing the money supply. And this is the government bank. For instance, guys, in case you are wondering what is which is your central bank, let me tell you that central bank is a bank which works for the social welfare of the economy, which work for uh, where you can't simply open your account. Like all the other banks where you can open accounts are called commercial banks, and they work under the guidelines of the central banks. For instance, in case of India, this is Reserve Bank of India. In case of UK, that is Bank of England. In case of Eurozone, this is European Central Bank. In case of United States, that is Federal Reserve. So every country has their central bank who is liable to decide the money supply and what is going to be their monetary policy. So speaking about the importance of monetary policy, like why is monetary policy is important and what we can get from it, I would like to show you a chart. For instance, this is a chart of euro US dollar, and you can see here that here back in 2014 the prices of euro US dollar has taken a sharp downward trend. Like there has been a sharp bearish trend in this euro US dollar. And maybe you guys must be wondering like what's going on in the market at this particular time frame. Let me tell you what actually happened and why market started falling after this particular period, like in this particular time frame. Like for instance, the market was trading at 1.3127, but right after that market fell down and market placed a low of 1.04. So even below this, market fell even below this. For let's say hypothetically the prices were 1.04, and there was a reason behind it, right? So the reason behind it was that there was the release of interest rate, and that release came from ECB. As I said, that ECB is European Central Bank. They just cut their interest rates from 0.05%, from 0.15% to 0.05%, which means that they cut their rate by 10 base point, which is insane, right? They gave no prior indication. They simply decided to cut their interest rate because their economy was suffering. They was not able to get higher GDP. Their unemployment rate was worse than before. So eventually they decided to provide their economy with a bailout program, and one of the tool they decided to use was the interest rate. But the thing is, the point is not what they use. The point is what happened after they decided to cut their interest rates, right? So this is what happened. Prices fell from this particular area and fell down to all the way down to 1.04, which means that if you knew what's going on here, you should have captured that particular move and you should have made a nice amount of money right there, right? So after that, we often say that, okay, I just missed an opportunity. Maybe if in future there is another opportunity like that, I would like to capture this particular opportunity. So today is the day. Today we can find an opportunity in the market, which is very similar to this one. So moving on towards what is Federal Reserve and what is FOMC. Guys, after discussing about it, we are going to move our focus towards the inflation rate and the interest rates and what to expect from FOMC today. But for all the newbies or all the beginners who are joining me for the very first time, or who are the beginners in the financial market, guys, FOMC and Federal Reserve basically, Federal Reserve is a central bank of United States, the one we spoke about earlier, right? We said that it's a father of all banks. We can say that it's a government bank, or it's a bank which decide what is going to be the supply of money in their economy. They decide what is going to be their monetary policy. They decide when to print new currency notes. They decide when to take money out from the economy. It all depends upon their economic events, their micro and macroeconomic events, and all the fundamentals which are going on in the market at that point of time, right? So the Federal Reserve is the central bank of United States, and the chairperson of that particular bank is Jerome Powell, and he is always in the highlights because whenever he speaks, he shakes the market, right? He's a man who shakes the market. So, what is FOMC then? FOMC is a committee within the Federal Reserve System. Like you say, it's a committee of members who decide uh, who decide what they should do with their interest rate, because we can't rely on one person to take a decision based upon for the whole economy, right? So what they did is they just made up the committee. They put 9 members in it, and then these 9 members are, sorry, not nine are in case of the Bank of England, but in case of FOMC there are 12 members. So these 12 members are responsible for designing their monetary policy. For instance, they will be deciding whether to hike the interest rate, or whether to lower the interest rate, or whether to keep it neutral. It all depends upon what's going on in their economy. If their economy is flourishing, if the GDP is going well, if their unemployment rate is doing very well, and if they are expecting that inflation rate is rising, and maybe that may become may become hyperinflation, or maybe that may not be controllable in future, so they can play with their monetary policy in order to adjust these particular parameters. So moving on towards the history of the inflation rate, I guess. Let's see what we got next. Yep, here we go. History of the interest rates. All right, guys, here in your charts, you can see that back in 2019, 2007 was pretty well, pretty good era for USA, because their inflation was their interest rates were touching 5%, which is quite amazing, right? But do you remember that there was a recession that began in 2007, 2008, and definitely like it continued for a couple of years, and there were like aftershocks of that particular uh, recession point. So since then, their inflation rate has been stuck to below 1%. Sometimes that was below that was below zero as well. That was negative, which was deflation. So in order to control that particular inflation, they decided to cut their interest rates, and as you can see here that their interest rate was 5%, and then with the passage of time that fell down because they wanted to accommodate their economy, and in order to accommodate their economy, they reduced their interest rate up to 0.25%, and that was back in 2019, and they kept it unchanged until the end of 2015, and finally they decided to hike the interest rate in 2016 because they believed that their economy is on the right path and that will grow like in future. So the interest rate increased from 2018, like it was at 0.25%, and then by the time in 2018 they hiked it to towards 2.5 2.25%. And why is that? Let me help you with it, like why they decided to hike the interest rate. I do have a chart here, which is their inflation rate chart. For instance, back in 2009, their inflation fell down to 0%, and then that was 0.2%. It also fell down into the negative territory, which is actually deflation, right? It is deflation. It is deflation. It is deflation, which is insane. Like the U.S. economy is stuck into a very bad situation, like back in 2009, and their inflation rate was not hiking. Actually they were in deflation. In case you are wondering what is inflation and deflation, inflation is a sign of growing economy. And if I give you a theoretical definition, inflation is a gradual rise in the prices of goods and services. It means that when the prices of something are rising, this is called inflation. And why prices will rise? Let's make a logic behind it. Prices will rise when people have money. Prices will rise when businessman is earning profit. Prices will rise when people have money to spend. Prices will rise when people have jobs and they have money by the end of the month to spend. So when they're spending, there will be more demand. When there will be more demand, there is going to be law of demand applies here. The higher demand comes leads to the rising prices. So uh, here this is representing that prices are not helping, prices are not rising, right? They are actually falling down. It means that, for instance, if something is costing me $100, even if I am selling it at $80, people are not buying it because there is no demand. Why there is no demand? Because maybe unemployment rate is so high, people are not able to make profit, people like economy is suffering, people don't have money. So they decided in 2009, they decided to lower the interest rate to 0.25% to deal with the deflationary risk. And since then, we can see that there has been an improvement in 2010, and uh, since then they knew that the sudden rise in inflation was not actually the long-term view, but this was because of a sudden drop in the price in the interest rate. So they stabilize their interest rates, and with the passage of time in 2018, you can see that their inflation rate is stable. The USA is targeting like 2% inflation, or you can say that Federal Reserve is targeting like 2% inflation. So here you can see that their inflation rate is stable, right? And even there, the inflation rate is stable. It's mostly above or around 2%, which means that finally they have got an opportunity to hike the interest rate. So therefore, they decided to hike the interest rate with the passage of time, and finally their interest rate is going towards 2.25. Okay, now what to expect from the FOMC today? The real discussion is what to expect from them today. Guys, Federal Reserve is we are expecting them to hike the interest rate today. Like there's a wide probability that Federal Reserve will decide to hike the interest rate from 2.25% to 2.50%, right? Which means that that is going to be a hawkish monetary policy, right? If this happens, I want you to understand two scenarios. We all know that there are going to be four rate hikes in 2018, right? We all knew it. We all knew it. This is not something new. If today Federal Reserve hikes interest rate by 25 basis point to 2.50%, I am not expecting massive buying in the US dollar. And that is because of the reason I spoke when I started the webinar. You guys remember we spoke about the sentiment analysis, and the sentiment analysis mean that we all have information, we all knew what is going to happen by the end of the month, and we all knew that how we need to behave. Everyone positioned themselves in the US dollar, right? And when they position themselves, it means that they were pricing in. The pricing in means that they were taking advanced position based upon the speculation that by the end of the year, maybe by the end of the month, like in the mid of December 2018, there is going to be another rate hike, which is going to be the fourth time, by the way, this year. So everyone knew about it. Even if Federal Reserve decides to hike the interest rate from 2.25% to 2.50%, this is not going to be something surprising for anyone. And the people who have already taken their positions in the US dollar are going to get rid of the US dollar, because this is something they were expecting, and that's here. It is called by the rumor sell effect. Right? Okay, now what is rumor here? Rumor here is that the Federal Reserve is likely to hike the interest rate by 25 base point. So everyone started buying the US dollar. So sell the rumor means as soon as market releases the actual news, which is definitely 2.50% interest rate, everyone will start selling the effect. Fact means that okay, that actually happened. But the thing is that I have already taken my position, I have already made my profit on this news, and there is nothing surprising for me here. So let's come out of the market, let's do profit taking. So as a result, what I'm expecting in dollar is a sudden rise in dollar, a sudden spike in the dollar index, and then a sudden drop, or maybe a sharp drop in the US dollar. But again, this depends upon the second thing, which is FOMC economic projection and FOMC press conference, which are also going to be there after the Federal Reserve releases their interest rate. So the thing is, before the Federal Reserve press conference, there is going to be a sudden spike if they actually decide to hike the interest rate. But then be careful with that. I won't recommend you to hold your positions, because I am also expecting a sudden reversal, a bearish reversal in the dollar index before the FOMC press conference. And that is because of the reason we spoke earlier. Right. So in FOMC, or what we need to expect in FOMC, let me tell you with that. In FOMC, there is going to be a dot plot. There is going to be, like for instance, earlier investors were expecting that there are going to be 4 additional rate hikes in 2019. 2018 is gone. In 2018, there is going to be 0.50 interest rate, which is gone. If they hike interest rate, there's going to be there's not going to be a strong bullish trend in the dollar index. However, if they decide not to hike the interest rate and they decide to keep it stable, there is going to be a sudden drop in the market, right? So that being said, this is over, right? The rate decision is over. Now investors will be looking for what they are looking to do, like what Federal Reserve is looking to do in 2019. Previously, the sentiment was that Federal Reserve is likely to hike the interest rate for additional 4 times in 2019, which was making US dollar way stronger than any other economy, because when I compare the USA with Bank of England, yeah, like with UK, with Eurozone, with Japan, with China, with Canada, with Australia. When I compare USA with all of these economies, USA is the only economy which is so much aggressive and which is aggressively hiking the interest rate. But on the other hand, these economies are not so aggressive. So there is going to be a carry trade. Like carry trade means that because since the interest rate is at 0%, or maybe interest rate is near to zero in these economies, especially in the Eurozone or in the Bank of England, in UK, in Japan and China, they people can borrow from here and they can invest in USA. So it means that they can borrow loans at a lower cost, and they can invest in the US economy, and they can earn an interest-free income, right? So this can happen. But the thing is that in order to accommodate the global, like after seeing the global slowdown in economies, uh, like investors are not expecting, like market is not expecting a hawkish statement from the Federal Reserve. Why is that? Let me tell you. There are basically multiple reasons. First of all, there is a trade war, right? So secondly, the trade deficit of USA is has widened to minus 50 billion, which is why they are implementing tariff on different economies, where USA and China tariff is sharing this trade, and that is in the high. So which is why it is causing a trade war. So lastly, let's say if the global economies are not doing well, definitely there is going to be an issue, right? Like if global economies are not making progress, they will not demand the other products. They are going to reduce their imports. So there has been a on a global level, there has been a slowdown in the global economic growth, which is why USA and especially the Federal Reserve is facing challenges, whether to hike the interest rate in future or not, or maybe what their policy should be. Second thing is, one of the objective of a USA economy is to reduce the trade deficit. Trade deficit in a way, like let me explain it to all the members who don't know what it actually is. Trade deficit means trade balance means that it's a difference between exports and imports. If your imports are higher than your export, this is deficit, and deficit is not considered very good for economies. It means that you are purchasing everything from other economies, and you are not producing things in your economy, which means either you are a services industry, or either you are keeping your people unemployed. So that is something which is one of the objectives of United States right now, or I must say the President Trump. And in order to reduce the trade deficit, they need to keep the dollar weaker, because if the dollar is stronger, importers will be motivated to import more, because they will be able to purchase products at cheaper cost, because of their currency is very stronger and the currencies of other countries is weaker. So this is going to motivate them to import more, which actually is not the target of Federal Reserve, right? Which actually not the target of government at the moment. So on the other hand, if dollar is getting too much stronger, then people will not be able to purchase from USA, because earlier, let's suppose, I often give an example that if let's say iPhone was costing 2500 dirham, and and then now for the same iPhone I have to pay, and this is the same price. The price is same. Let's say $1,000, but I had to pay like 2,500 dirhams. But right now the same iPhone is costing $1,000. But the thing is that because of the strength of US dollar, I now have to pay 2,700 dirhams to purchase the same iPhone, which means that maybe out of 100, maybe 50% or 40% or 30% or 20% people will be less motivated to purchase an iPhone, right? So that being said, Donald Trump has criticized the policy of USA, and which is why I am expecting that today's FOMC is likely to be dovish. right? So the dovish FOMC, for instance, dovish FOMC means that they may say that in 2019 maybe maybe two rates are coming, maybe one rate are coming, or maybe they will decide what to do next in 2019, and so that is going to make US dollar weaker. However, on the other hand, if they decide to give the hawkish FOMC, this is going to drive bullish trend in the economies, in the currency, right? So lastly, we have US dollar index here. For instance, this is a 4 hours chart, and you can see that there has been a selling in market, and the reason behind this selling is that investors are expecting that FOMC meeting is likely to be dovish, which means that they are likely to make dollar weaker. So in that case, most of the investors have already starting doing profit taking. Um, but the thing is that the immediate support remains at 96.75. Let's take a broader look on the weekly yeah, on the weekly chart. So here you can say that see that they this is called a ascending triangle. Ascending triangle means, let me highlight that portion to make it more easier for you. There's an upward trend line and there's a horizontal resistance area which has now been violated, and that is called ascending triangle. And ascending triangle, once is violated, leads to another bullish trend in the market. So right now you can see here that there was a double top pattern, and the market went higher, fell down, went higher, tested this particular level, fell down to test the bullish trend line, and then again went higher, tested, and fell down, and again finally it violated the 96.40 resistance level. And right now what you can see here, prices went higher, but again fell down to test the 96.40 support, sorry, resistance come support level, right? And at the moment market is still holding above this particular level, and right now the immediate support is again going to be 96.45, and the resistance is likely to be 97.53, and the violation of 97.50 is likely to lead the dollar index towards 98.60. Right, and yep, I guess that's pretty much it. On the lower side, we can expect 95 is going to be a pretty strong support area for now. All right, guys. I hope that you enjoyed this session. If you guys have any question, I will expect you to post in the chat box. You guys got 30 seconds to do so. So I would like to open the house for a question and answer session. All right, looks like everything is fine. So, guys, thank you so much for your feedback, and I really appreciate your presence. And do feel free to visit our blog, and there you will be able to find the schedule for the upcoming webinars. Anyways, the next webinar is expected on Monday at the same time, like 1 p.m. GMT time, and that is going to be something related to the beginner strategy. So thank you so much for being here today, and I hope to see you again in the next webinar. Until then, take care of yourself, and don't forget to subscribe the ABFX. You can open an account with us, and then you can also, like, we will be helping you out with your question and answers, and then you can also have more of functionalities you can avail more functions on our website. So that's pretty much it for now. See you guys again in the next webinar. Until then, take care. Bye bye.